Hello, in this video I'm going to share uh, how you can buy and sell stocks. Basically selling the stocks that you own. If you already have a stocks, let's say you already have 10 stocks or 100 stocks, you can sell that to the market and then income every week. Income from that every week. I'll show you how you can do that. I've been doing this for the last 3 years and I'm getting good at it. I learn a lot of ways to basically sell stocks, to buy stocks, and my strategy, as you can see on the screen, is getting better. On this, you can see I bought 9 shares in 5 days, and 6 of them turned out to be a winner. 2 of them turned out to be a loser. 1 is a break even. That means I didn't lose money that I paid. So I'm going to share with you what works for me, and I am able to make some money from this actually. If you look at this month, so it's ranging from January 4th to January 8th. Today I did not trade today. Right now it's actually 12:47 midnight, so the market is closed. But in those days, I lost some money, but I made most of the money, as you can see. And this is coming from just selling a bunch of stocks. I'll show you what I'm talking about. Okay, let's go to, for example, this Tesla. And so I bought this Tesla, right? I paid that amount of money. I'm gonna buy stocks anyway for investment, right? So instead of just buying these and wait for the stocks to go up and make money in this one way, I can basically, I would hold this in my position, right? This is one, which is 100. I have this is a leap course, which is called LEAP, LEP, LEAPS. LEAPS basically, I buy this for 1 year. 1 year. Actually, it's 2 years. It expires in 2027, December 2027. So instead of just waiting and making money this way, it goes up with the stock. When the stocks go up, when the stocks go down, instead of doing that, I can basically rent these out. I can use these stocks as a security. I can sell it as like an insurance to make money. I show you what I'm talking about. See this right here. When I bought these stocks, well, this is a LEAP. My strike price is $350, and as you can see, 431 the current price for Tesla. Basically what this is if, as long as Tesla stays above $350, I'm okay. This money is not going anywhere. So instead of having that money there and waiting for the stocks to go up and down, I can sell back to the market, rent it. I should say rent it back, because if I'm selling it, it's not going anywhere. It stays in my account. So this is what I just did. I short, meaning that I sell that one, and I sell it at $442, $442.50. $442.50. Basically, this person, I sell it to the market for $267, and I will get that money right away, the same day that I sell this to the market. And what will happen eventually is, if this stock stays the current price of this Tesla, if it stays below $442.50 on January 9, I will keep the $267, which is exactly what is happening right now. Tomorrow is the 8th. You can see tomorrow is 8, which is it's a midnight right now, so it's already tomorrow. But this stock is not going to go to $442.50 by tomorrow. It's not possible. So also look at the delta. It's very low numbers. So that's so that means by selling these stocks at the strike price of $442 for $267, this is the extra income that I'm doing every week, and I can do this every week. And that's how I've been making money. From one of the ways you can make money by selling stocks. Remember, even though you may be thinking 17,000 is not enough to buy 100 share of $431. That's true. So what I did is, instead of, because I don't have money to buy that amount, 431, go to calculator, 431 times 100 would be $43,000. That I don't want that kind of money to be sitting, not making money. So in an effort to spread the money around and make money with spend as little as possible and make as big as possible money. So what I did is, I just do cover call. LEAPS, meaning that you basically go to the options and buy the stocks, options for the whole year. You go all the way up to, for me it was in December, I think it says December 2007. So yeah, right there, was 708 days away. So instead of owning the actual stocks outright, I rent it for 708 days. And if the stocks go up, which Tesla will always go up and down, I make money on the stocks. If the stocks go up, yes, I make money. But instead of making money on this, just from the stocks going up, I can also make money by selling it, just like what I did here. $67, or whatever the strike price is, because this amount changed with the strike price. And the strike price, you don't want this number to be close to this number, because if the stock price get close to or go over the strike price, which is this one, I'm trying to highlight it, if it goes above this number, you lose this money. Actually what ended up happening is the people that you sell these stocks to or rented these stocks to, they will eventually take your shares away from you. Your share will be sold at this price. Remember, you bought it at 350 initially, because the stock price, this price goes up to 442. If it goes above that number on the expiration date, they will sell your stocks at that number, 442, to these people, the people who bought it. Okay, so you don't want to wait for that long, unless you want to get out of the market, and then your money, you're not losing the money that you pay for to initially rent the stocks. You're not losing this 17,000. You will get that money as soon as the stock is sold at 442, and you will get that money back plus whatever the additional amount that the stock price itself went up. You get the money also from the stock price going up, I believe. But eventually, you don't want to get to that point. You always, so when I sell, let's say the day after tomorrow, also you don't have to wait for the expiration date. Let's say I don't have to wait for the January 9 for the expiration date. Anytime these things go up, you see, right now, it went up. It went up is in 34%. You can always close the short calls. This one, you can buy to close. When this number, instead of 34%, it gets to like maybe 74%. That means you're in the money. You have received 74% of that money. Sometimes what ends up happening is this number start going up, flying up to number 442. You don't want that. What you want is for this number to stay below 442. But this is very easy to do, because when you buy the stocks, when you selling it, I'm sorry if it is confusing. Let's say after you already you bought this one, right? This is the call options. You deposit the money, you get approved by this company or whatever platform you're using to trade, and then you go to 700 days away, you click this, and then you go to delta 80 at the minimum. You go delta, I mean this one right here, go to delta 80, bam bam bam, 80 and minus right here 350. Click on that, and then market price, go into cancel. So, and then hopefully normally you want to buy in the mid price, and then you basically just buy this. This is 700 days away, so even though it's a call options, you have so much time. You have 2 years, and you can sell it every day, every week, making between $300 to $400 easily. And then once you purchase that, and you go back to this stocks, and then you go here, you click there. When you click here, it's gonna show basically there's gonna be something here that giving you option to sell short calls, sell short calls. It doesn't show up right now because I already have short calls open. This one is already open. If I sell and close this one, if I buy to close it, it will show that options to do another one, to sell another one. You can do this every day. I mean every week or every day if you really wanted to. But every day, daily, you're not gonna make that much money. The longer you are away from the expiration date, the more money you make. You see, if you sell it just for today, you're not gonna make that much money. You're still gonna make money. Just stay away. When you do this, the goal is to stay away from the current price. The current price of this stock is 432. I mean 431. Your goal is to always be above that number. You mean to be far away from it. To be like, maybe this is 431, maybe buy it at 452 or something. Sell it, sell it at 452. So you go up to 452, or delta, the mine is right here, 442, because delta 19 is safe. You don't want to be, you never want to sell it above delta 25, because that means you're too close to the stock price. This basically tells you the percentage, the chance, how the percentage of the likelihood of how far you are to 431. And this one is 19%, which is, you have, what is it, over 70% of this. The stock price is not gonna get close to your strike price. This is what they call strike price. Strike price is the price that you pick. Stock price is the price of the current stocks. So as long as you do that, you'll be good. But to be safe, do something like this. Even delta 11. Delta 11, delta 8, like that. You will always be winning, and you can always get out if you really wanted to. If the stock price is coming down to you, if this stock price is coming closer to where you are, you can always get out of the market. Just sell it, close. You buy back, and in some you buy back, or you can roll it. And so that's how you can make the money on there. And I have been doing this. The other way you can do the same thing is to just buy the stocks. Let's say instead of Tesla, you buy whatever stocks that you want. Once you own the stocks, you can do the same thing on whatever stocks that you already own. If you own the stocks, you can go to that stocks, and you can do you can basically do the same thing. You sell short calls. It's actually called cover calls, but it's the same thing. And I hope this is helpful. If you have any question, let me know. I'm new to this. I'm gonna keep doing this every week. I want to show you what I make. My goal is to grow this account to at least $100,000. I will do this every week. This account is basically, I just transfer some money in here last week, and I deposited $36,000, as you can see. And I already I deposited on the 27th, and it didn't clear into the 5th. Didn't clear into the 5th. So from that, today I was able to make that, to grow that account to 39,000. And previously I had some money on here, but I lost because that is last year. Last year I didn't understand what I was doing, and I made a lot of mistakes. I was chasing higher premium. That's how I was losing money. But right now I learned my lesson. Higher premium, what I mean is, let's say instead of, this is how you can lose easily. Let's say you want to sell the stocks. Let's say you go to the January 16, you want to sell, you already own the stocks and you want to sell it. Right now the current price of the stock is $4.31. Let's say you want to make big money. You go to this one. This is $900. Delta 46. That is the disaster, because you're very too close to the stock price. This price, you're too close to it. You're only like a couple of dollars away from it. If you come down to you, it's gonna affect, it's gonna destroy you. Basically, what I mean is that it's gonna kick you out of the market. Now you have to buy the stocks back, meaning that the one you already have, that, and then this one right here. If the price, if this price if the stocks come close to this price, or it goes above this price, if this stock price goes over this one, 442, what end up happening is you will have to either buy these back at 442, so you don't want that to be closer to this one, and so stay away from that. That's why I recommend always go to lower delta when you're selling it. Sell it at delta, like delta 15. I know it's not going to be that much money, but still it's free money. As long as that upper stock price is away from you, it's going to be guaranteed money. You're going to make money every week. I hope you understand that. If you have any question, let me know.